Ladies and gentlemen, welcome back to the channel. I hope you guys are ready to start this week off with a banger because the futures are ripping and it looks like it could be a pretty bullish week for AMC stock. We're in the midst of forming this bullish technical indicator, which is called a triple bottom. Statistically, if that happens, you tend to make your way up to the highest level of resistance set before the triple bottom, in which we are going to talk about that, what it means, and where AMC could go in this price prediction video for AMC stock. But besides all of that, we're going to look at, like I said, the technical analysis. We're going to look at the Ortex data, the Stonko tracker data, and the broad market data, because as we do know throughout 2022, economic data points are very impactful to AMC. They're very impactful to the markets, and it can move the stock a lot, guys. So let's get straight into this video. Hit that like button and subscribe to the channel if you have not already, and hopefully you guys are ready for a very profitable 2023. This is the last week of 2022, guys. So let's get straight into it. Enough of the BS intro. So before we do, a quick disclaimer here, because I know everyone needs to hear it, especially heading into the new year. Do not invest money that you are unwilling to lose or to sit on for a very long time. There could be a really bad bear market. You could see a huge crash in 2023. If you are investing money that you need for bills, you're investing money that you need for other things, that is not a sustainable way to invest and to grow your net worth. We're all here to make money. That's what we do here on this channel, but make sure you guys have that fully, that notion fully embedded in your mind. If you put this money to work, you're putting it to work for an extended period of time, unless you're simply like day trading or something, and at that point you expect to lose all of that money, right? Nonetheless, that's not what's going to happen in my personal opinion. I think we're going to make a lot of money on AMC, so don't get it twisted, but that's a quick disclaimer for everyone, guys, because I am not a financial advisor, and even if I was, I cannot give broad advice to each and every single one of you guys. And fun fact, we are in the midst of getting that financial advisor status, so I'll keep you guys posted on that, but still won't be able to give you guys broad financial advice, but that'll be pretty cool. Nonetheless, guys, let's get straight into everything you need to know regarding AMC and the broad markets for this week. And first things first, this could start AMC off with a pretty decent move to the upside in my personal opinion, because Avatar 2, the box office just crossed $900 million, and obviously Avatar is the top movie in theaters. It's going to be for weeks now, and I think the biggest numbers, I shouldn't say the biggest numbers probably were the opening weekend, right? You almost hit $500 million. A huge weekend opening, bigger than 99% of other films that do go to movie theaters. So it's already been pretty good for Avatar, but I do think it will continue to be good because, I mean, the first opening weekend, you had really good numbers, but every weekend since then, it's either been Christmas, right? And really, the movie came out 10 days ago, almost exactly. You've had this huge winter storm. People, at least in my region, they haven't been traveling for much of anything, let alone to go to the theater. So I personally want to see this movie, but I have not had a chance to go and see it because of the winter storm, because of kind of things that are out of my control, right? So I do think this movie will continue to post some pretty big numbers, and I think it will be a big deal to AMC. So there is that one. Numbers looking pretty good that are coming out this weekend. Now, besides that, you don't have a lot of earnings. You don't have really any earnings. You have 3 earnings in total that are not going to move the markets. You're just not to earnings season yet. So there's that lack of a risk factor, right? The biggest risk factor really going ahead into the future, probably not going to be economic data. It's probably going to be earnings. If earnings come out really bad, then you're going to see a lot of earnings cuts, and that is really not going to be good for the stock market and for obvious reasons there, right? Now, let's get into some of the other things that we need to talk about, like the Ortex data. But first, while we're on just the topic of economic data, I want to point out that we really don't have anything for economic data. You literally have nothing besides bond auctions this whole entire week. Besides on Thursday at 9:30 in the morning, you will get initial jobless claims, and that can definitely move around the markets. If there's less initial jobless claims, meaning less people are filing for unemployment, might be seen as a negative thing for the markets. Again, I can't forecast those numbers, and these are not the biggest data points, but the last one we got was a pretty big reaction in the market. So I do want to point that out. Not expected to be a huge event. Other than that, you literally have nothing. You do have pending home sales on Wednesday. These typically do not move the markets around too much, as well as the Richmond Fed Manufacturing Index. Again, don't tend to move around the markets all too much. So you don't have CPI, you don't have retail sales, you don't have personal spending, you don't have PCE, you don't have none of the major data points that the markets typically react 2 to 4% off of in a single day. So I think that in and of itself is a bullish thing for AMC, for our portfolios in this next upcoming week. So there you have that. I also do want to point out the fact of tax loss harvesting. A lot of people have already done that. So I do think in this last week, you might actually see some buying in preparation for 2023. Because if you tax loss harvested, a lot of the mutual funds, pension funds, things like that, hedge funds, they do this in, November, right? Maybe early December. A lot of them do it in mid to late November. So around this time, the end of December, they can start to buy stocks again and position for 2023. Because if you guys are unfamiliar, if you do tax loss harvest a stock, and this goes for individual investors as well, you have to wait 30 days to rebuy that stock. So if you sold Tesla as a loss, for an example, then you'd have to wait 30 days from the day you sold it to start buying that stock again. And that's what a lot of people do, because even if you sell a Tesla or an AMC or whatever other stock that you're tax loss harvesting, you don't necessarily want to stay out of that stock forever, but you want to reap those tax benefits. So you do have to wait 30 days to do that. And I think it could be an overall beneficial thing for this week for the markets. Obviously, there's no way to know that exactly, but I don't think it's going to be a huge negative factor at this point. And this cat, do you guys see this cat? This cat is ridiculous, but she's so cute and cuddly and lovable. Nonetheless, she's just sitting on the lap. She's like the new YouTube kitty, the AMC kitty. Can we deck her out in some AMC gear? Would that be appropriate? Just make her like a rocket or something, and like put her up on a pedestal? That'd be pretty cool. We'll have to see about that. Maybe that's a pretty good idea. Let me know down below in the comment section, guys. Nonetheless, let's get into more specific data around AMC that you definitely want to know. And if you guys watch my videos, if you pay attention to AMC, if you're invested in AMC, then you probably know that last week the economic data started to take a turn for the bullish side. And what I mean by that is cost to borrow rates started to spike, like went from 20-30% Monday to Friday over 200%. Cost to borrow max over 300%. And these were not glitches. These are the actual numbers that we have been getting reported for the last couple of days. So let's run through those numbers if you guys have not seen it, and then we're going to get into some of the option activity. So first things first, guys, we did get a big drop last week on Friday. You were down almost 11%, and we had seen a big drop on Thursday, like 25% at the lowest point, and then you've seen a sharp recovery towards the end of the day. You only closed down about 7%, so well off of that 52-week low that we had set previously in the day on Thursday. And then on Friday, like I said, you went down another 10%. We're still off the 52-week low, which is a very positive thing. But I think the biggest reason for the drop that we seen on Friday was because it was a Friday. It was a decently large option expiration for AMC. But what you also seen is a lot of those daily options being bought by the hedge funds. A lot of people are going out and buying puts on AMC, and take a look at some of these numbers, guys, especially if you do follow all of these videos, if you do follow the channel, then you know on an average day to see $500,000 to $3 million is pretty typical for option activity in AMC. Well, on Friday, you've seen 87 orders, well higher than where your average option activity is. And these are only interesting options, so it's like what sparks the algorithms to pay attention to them. Could be the size of contracts, could be the close days to expiration, it could be if hedge funds wanted to instantly get into these positions. There's a couple of reasons why these do show up, but overall it tends to show urgency by hedge funds, either to the bullish side or the bearish side, when they're getting into these positions. These positions you're seeing tend to be more important than people just buying singular options or buying a position and like putting in a limit order, right? These are more like market orders. Like, people want to instantly get filled on these orders. Nonetheless, 87 orders, well above average. $30.5 million, well above average. I would say that's over 10x the average volume that we see or dollar amount that we see on AMC options. And the positive order value was 1%, well lower than what that typical positive order value is of in between 45 and 75%. So you've seen a lot of bearish options. I think that made that move down for AMC on Friday much worse than it otherwise would have been. Now, if we do take a look at the cost to borrow rates, you can see cost to borrow rates have been spiked for a while now. The last reading that we got from Interactive Brokers was about 65% because there's very few shares available to be lent out. Most of the time you're seeing 0 shares available. Sometimes a couple thousand, but most of the time 0. And in the grand scope of things, even a couple thousand shares is nothing when the flow is 513 million shares. That has caused the cost to borrow rates. The last reading that we got was 228% for the cost to borrow average. The cost to borrow max was 305%, and the cost to borrow minimum was around 25%. So even that cost to borrow minimum is still very high in the realm of cost to borrow rates. Over 20% is excessive. If you're getting to 200-300%, that usually means something big is about to happen. And what we have seen, cost to borrows, when the rates when they spike, typically you do see a spike in the price of the stock, and we have not yet seen that. Very well could be in this next upcoming week when we do get that. Now, let's look at the option activity very briefly for you guys, and we'll go ahead and just pull it up right here. We obviously use the Stock O tracker data, and if we take a look for this Friday, that is going to be December 30th. You do have about 2,400 calls that are in the money currently, and about 62,000 calls that are out of the money. If we look at the put side, about 27,000 puts that are in the money, and about 16,000 puts that are out of the money. So when you put these numbers together, you're almost at a 2-to-1 ratio for calls to puts. But if you look at the in the money options, these are options that are typically already hedged for, right? Say you bought a call. Let's just give everyone a quick reminder. Say you bought a call, right? Well, who's going to make sure that you can sell your stock at, let's say, a $10 call for AMC, or whatever the price of the stock is, right? The market makers have to go out and hedge those positions by buying stock. Now, when you buy a put, who ensures that you can sell your shares, or calls obviously buy the shares, right? If you have a $10 call and the stock went parabolic, you obviously made money on the call, but you have the right to buy stock at $10. So if the stock goes to $20, right, you just made a lot of money because you have the right at $10. Well, somebody's got to sell you those shares at $10. So what the market makers do, they go out and buy the appropriate amount of shares to be able to sell you those shares at $10 if you wanted to exercise this theoretical contract. But they do that when these contracts get close to in the money, or start to go into the money, right? So these calls that are in the money, these puts that are in the money, long story short, they've probably 90 to 95% of these options have probably already been hedged for in some degree or the other. So you've seen 27,000 puts that are in the money for this Friday. That means you've seen a lot more hedging to the downside than for the upside, where you only have 2,400 calls that are in the money. So what that means is if you see a move to the upside, if the stock can get a break to the upside, you're going to see a rapid de-hedging, at least on the put side, and a rapid hedging on the call side. Both of those are forms of buying power. When puts go out of the money, that's a form of buying power. Market makers have to go out and buy stock. When calls go into the money, as you do know, that is a gamma squeeze, or can lead to a gamma squeeze. That is also market makers buying shares to hedge out the options here. So as you guys can see, the real risk here it is potentially market makers have to go out and buy a lot of stock. If the stock does make a move to the upside, you're much more skewed to an upside move from this point, from where we currently sit, rather than that downside move. So there is that information. Let's take a brief look at the technicals, and then we will get you guys on your way, hopefully with a better understanding of where we currently sit with AMC stock, guys. So as we reported in the last couple of videos, I don't believe the last video, but I believe 2 or 3 videos ago, we talked about the triple bottom formation, exactly what that means. But you typically tend to rally to the resistance level before the triple bottom was formed, once you get that confirmation. And a confirmation would be really from here, if we broke out above about $5.50 per share, roughly in that range. There's not a penny, there's not like a exact penny kind of science to it, but roughly around 550. If you get a close above this line right here, that would be a triple bottom formation that has been realized. And if you go back to the previous level of resistance before the triple bottom, you're going to be looking, around $10 per share. That would be a huge move from where we currently sit. But if you look at the moving average here, that would be around, because we found resistance at the 50-day moving average back here. That was the resistance level before the triple bottom was formed. That would put you around $6.42 per share for AMC stock. That would be about in the middle of the last rally that we just seen in mid to late November. So I think at the bare minimum, you're probably looking at a move to about 642 if we get that break and actually confirmed this triple bottom formation. And that's going to be kind of my base case scenario, given everything else we've talked about here in this video. Cost to borrow rates spiking. The options that are definitely skewed to an upside move, especially if the stock starts to go up. So those are two bullish factors. You do have avatar numbers, which are very bullish. You have lack of economic data, lack of earnings, potentially tax loss harvesters that start to buy back some of those positions that they sold. That's 6 reasons why I think potentially you could have a good week this week with AMC stock. Obviously, I'm not a financial advisor, but that is where I am currently positioning my portfolio, at least my portfolio that is in AMC stock. So there is that, guys. The risk to the downside would be this 52 week low that we did set on Thursday, which was $4.11 per share. I think you could break under that if this week, for whatever reason, causes mass panic and people run for the exit. $4 would be that support level that I would really be eyeing. So I think there's a much greater chance, and a much more likely outcome would be the stock is probably going to have a green week this week, right? Given everything we talked about. If it has a bad week, it's probably not going to be that bad because we're already so low, guys. So there is all of that information. Obviously, watch for volume to come back into the stock. Watch for the things that I have already just laid out to you guys. But if you can't tell, pretty bullish on how things are setting up, guys. So there is all of that information. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys also want to come trade with me live in real time as well, just had some big put positions hit, which was definitely a good refresher for the community, guys. So that is it. If you guys want to join it, link down below in the description of this video. Nonetheless, enjoy the rest of your nights. I will see you in the next one.